Welcome to Theo Trade. This is Don Kaufman. It's June 10th, 2019, and you are watching the Theo Trade evening video. Well, the market's still having a bit of a wild ride, not necessarily to the upside. I mean, hey, in today's session, we laughed, we cried, we rallied, we'd faded. Can't ask for more, though, as an intraday trader. Gotta tell you, I actually caught a couple of the intraday scalps as well. Anyway, I wanted to kind of kick it off with talking about specifically the range. I like it. Again, as an intraday trader, we start off the day somewhere around 28.85. We rally all the way up about 20 handles, and then we're faded right back to effectively where we started the day. So 20 handles up, 20 handles down. What is not to love about that? But I think that the big question that comes out of this is that it? Come on, we faded a little bit. A lot of people are like, oh, we're going to reverse. I mean, come on, look at the last couple of trading sessions. As I was talking about on the weekend video, that kind of defines blistering rally. This is the quintessential rip your face off rally. But today, right, it's almost like what you call the doji star. Was that it? Is it the rally over? Well, I got to tell you, based on what the bonds are saying right now, I don't believe it to be true. And what I'm saying about that is, the bonds, they kind of closed right at their lows. I mean, literally on their lows. And what that tells me is that this most recent rally, it may kind of fizzle out a little bit, but it's not necessarily ready to reverse. We would need something, of a spark back to the upside. And I want to be absolutely crystal clear about this. We need a spark back to the upside inside of the bond market to all of a sudden put the hurt into the financials and cause the S&Ps to come down. See, that's the key, again, to this marketplace. I mean, when it comes down to it, if you look at the intraday trade, I'll look at the NASDAQ in this case. If you look at intraday trade on the NASDAQ, the NASDAQ, again, the NASDAQ, it did close off of its highs, but it didn't fade nearly as much as the S&Ps. Remember, the S&P is kind of opened and closed in the same range. The NASDAQ, I mean, this thing is just wild to the upside. The first few minutes of trade, what did you see? A move from what? 2770, A straight shot, Past what? 75.10. Amazing, astounding 40 points without looking back inside of about a 6-minute period. Nevertheless, it faded a little bit, but the NASDAQ is still really strong relative, to some of the other major products. What actually faded the markets today was very specific. It was inside of the financials. Another big drag on the markets today was, once again, it's the energy sector. And I've been pointing this out time and again because the energy sector hasn't really participated much in this most recent kind of blistering rally. And to me, and again, I'm going to actually cruise over to oil as well. To me, this is longer term. This is, hey, we're really pricing in a true global slowdown, right? So oil is coming down, not necessarily because it had anything to do with commodity, nothing to do with the dollar, because at the same time oil is coming down, the dollar is absolutely collapsed in here. So that, take that out of the equation. To me, this is pricing a global slowdown. And when you're pricing a global slowdown, you would think, logically, you would think as a trader, as an investor, if you're into fundamentals, you would think that would possibly hurt the S&P 500, but it's not. The S&P 500 is exploding to the upside. Now, there's a few aspects of this I want to talk about. One of those deals directly with the Fed. So the Fed next meeting comes up, June 19th. So we're about 9 days removed from the Fed's meeting. I believe between now and then, first of all, they're going to hit a quiet period. That's when they don't talk before the next meeting. But I wouldn't expect much out of the next meeting. In fact, the market itself right now is pricing in not one, but 2 rate cuts. That's 2 quarter-point rate cuts. So, if you take a look at interest rates, Fed Fund futures, are 2.25 2.5. That's the range they're in. So they're pricing, all right, what? Not just a quarter point. They're actually pricing a full half a point cut coming out of this for the remainder of 2019. I don't think it's going to happen. I think we'll be lucky to get even a quarter a point. There's actually a lot of people that are starting to come out and say, you know what? I think the Fed's comments are grossly overstated at this point. I think the marketplace has done a terrible job at this point in time. It's like the marketplace is trying to dictate to the Fed what to do. They have another thing coming. And a lot of the rally that we've seen, in fact, pretty much most of the rally that we've seen in the last couple of trading sessions is all predicated on the idea the Fed's going to cut a half a point. You're just not going to get it. All right, strictly my opinion, you ain't getting a half a point cut. So what's the marketplace going to do? Probably throw a little bit of a taper tantrum again. It's not so much like the taper tantrum, but they're going to throw an interest rate tantrum. And that's a movie coming to you. It's actually what's going to keep volatility kind of kicked up throughout the course of the summer. When I'm talking about volatility, all right, volatility, and again, I'm going to have to start to redefine what volatility happens to be, because in this marketplace, we're seeing volatility to the downside. We're seeing volatility to the upside, which is absolutely spectacular, okay, for our infinity spreads. So again, I want to reiterate this point. For the marketplace to say that's it, this rally's over, the bonds have to start to do what? To rally back up. The bonds will rally back up, okay? It pretty much tosses the towel in for the financials. The financials, I mean, this is kind of the quintessential, it's the death candle over here, but they closed towards the lows of the session. Now, let's actually switch gears for just a moment. There's a stock that everybody seems to be talking about as of late, and I'm going to hop in and all right, I'll throw my hat in the ring over here on Beyond Meat. So Beyond Meat is beyond ridiculous. First of all, I'd just like to say I have never tried, okay, the Beyond Meat. Not yet anyway. I got to. You know what? At $168 a share, I think I'm going to try the tasteless burger, I'll call it. But Beyond Meat, forget about what the burger might be. Forget about the fact that it just IPO'd at $45. In fact, the IPO price was substantially less than that. That's the first trade that was done on a percentage basis just since the IPO. Granted, the IPO was only the beginning of May. It's up 155%. The point being is we are in an absolutely wicked short squeeze of a lifetime. And the reason I'm covering it here on this evening's video is not only is it hard to borrow, but we're getting, dozens and dozens of emails specifically about this. People are like, what are we doing Beyond Meat? We think it's going to go down. Okay. So does everybody else. And I'm not saying that facetiously. So does everybody else. Okay. Everybody sees it on the screen. In fact, take a quick glance over here. This, all right, it's the bid and offer spread. Right there, okay, it's the last price traded. Clearly, you can see it's hard to borrow. It's not just hard to borrow. There's absolutely none to borrow. Now, the stock is trading right around the $168 level. Now, in trading, when we start to look at what's called, the put-call parity or put-call relationship, if you will, you're supposed to get a marketplace that looks more like, well, here, let's go switch to a different marketplace for just a second to show you what, a more stable marketplace might look like. And again, we're just gonna switch for a brief and fleeting moment, and we're gonna go to a high flying stock like, I don't know, let's get crazy, like Amazon. So we go to Amazon, and Amazon's trading right at 1860, right? So what I want you to see inside of Amazon is, okay, some of this put call relationship. They're trading for the most part, okay, at a similar price, right? The calls are trading for a similar price to the puts. When you go back, you go back to Beyond Meat, look at the price of the puts versus the calls. See anything unusual here? Well, the puts are trading for $40, we'll call it $2. The calls are trading for roughly $20. Chaos, right? In fact, you can do what's called a synthetic. What's a synthetic? Right? If you wanted to buy or get long Beyond Meat, if you wanted to get long Beyond Meat and not go out and just buy the shares, because, there's people that are like, Beyond Meat is going to go higher. If you think Beyond Meat's going to go higher, go right ahead, buy the shares. But it makes absolutely no sense right now. You would much rather trade the options. Why? Look at this. Go out and sell the 170 puts. You're like, selling a put naked is scary, Don. Okay, yeah, well, you're selling the put to be able to purchase what? The call. Now, I'm going to remind you of something here. This call happens to be right there. That's the 170 call. As far as I'm concerned, okay, stock's trading at what? 168, the 170 call. It's about $2, out of the money. Trade's actually done, though, for a $23 credit. And you're like, well, I don't get it. If you are getting synthetically long for the next 39 days, okay, the risk is so great that they're willing to pay you a $23 credit just to take this risk. And you're like, whoa, I still don't get it. The price of the puts is completely and utterly jacked up. The implied volatility on the puts, which I'm about to show you, is so high, okay, that the put is literally trading for double the value of the call. And they're giving you a credit in what is termed, again, there's what they call conversions and reversals, but I don't want to get too deep into this. This is synthetically long stock. If I go over here and I do analyze trade, so we're going to go ahead and we're going to analyze this trade, and I'm just going to come in right here and just do 1 day step. That's it, right? When you look at the risk graph, if you look at the risk graph, right, it looks exactly like stock. It's called a combo. Again, reverse, talk about reversals and conversions. This is a combo. But this particular combo, if you start to look at its break-even point, again, you're getting a $23 credit to effectively get long the stock. There's a lot of people that don't understand this stuff, and what do? They just go out and they buy the stock. If you buy the stock, your break-even point is what? 168.80. Here, let's go over here and analyze this right along with it. Right, so we're going to zoom in very, very tightly for just a second. Okay, I'm going to take the combo off. If you go out right now, and you were to buy the stock, you can see effectively your break-even point is 168 and change. Okay? If you go out and you do the combo, and you're like, combo! I like calling it a combo. You go out and do a combo over there, you're receiving a $23 credit effectively to do so. Now, as time moves forward, you're going to collect, again, that $23. It is giving you a $23 like kind of pad in this trade. Now, this is in no way, shape, or form, okay, to get you to get long Beyond Meat. I don't think I want to get long Beyond Meat, but that's how insane the pricing and premiums have become. And to kind of cap this off, to kind of ice the cake, look at the implied volatility of the puts versus the implied volatility of the calls. The puts, okay, versus the calls. Do you realize there's 100% more implied volatility in the puts? Hence why their price is literally over double the value of the calls. It's a very unusual circumstance. We also have, in this case, in the short duration options, look at this, 186% implied volatility. You could look at the exact same trades, or say the same trade. You can go out here and sell the 170s. Okay, so we could sell the 170s and buy the 170 calls, even with 4 days remaining to expiration. Okay, in this case, the combo, it's still a $7.55 credit. Talk about insane. It's right there. Beyond Meat, people. They're paying you to take the risk. They're paying you to say, I dare you to get long this stock. And even then, I don't think paying me is going to do it. With that, back tomorrow morning live here at Theo Trade. Have a wonderful evening, everybody. Bye-bye.